What's up? What's up? What's up? Trading momentum, y'all, my peeps, and I just want to talk about some trading strategies and the tool that I use. It's been a long-awaited video. I've been meaning to record this a long time. For the sake of time and your attention span, I'm going to do my explanation in parts, right? And you'll see what I'm talking about when we get there, right? But first, I was going to break down the trade that I made on Friday. Why'd I get into SPY puts? Because let me show you something. These are the levels from Friday. I haven't updated these levels yet, so these are still the levels from Friday. I can see right now price action on the daily chart, the S&P 500, it went and touched the one-day standard move, and there was no other GEX levels above it except for the GEX flip, in the 7-day STD. Now, think of these 7-day STDs and the 1-day STDs as kind of like almost governors in the market. If price pushes too far past it, the market tends to correct, or there are really good support and resistance to bounce off of. As you see right now, as you look at this 1-day STD a couple of days ago, we bounced off it really hard and made it move up, and then we hit the top of this side, this one, and we sold off. Now, the reason why I got into this play is because I know that when we touch this price was struggling to get over 432. All the GEX levels are below. For market makers and price action, GEX levels attract price movement. But the price levels being all below, I was like, you know what? We are going down. And that's why I was confident. That's why I was able to get into the puts confidently and just let it trade and just let it play out. The thing about trading SPY puts or calls is that they're very volatile and there is very easy to get shaken out of the trade, especially if you're scalping. But if you're kind of like trying to play for a couple hours or so, you kind of just got to make your trade and commit to the trade, right? And so so how do we find a bottom? Like, how do we know like what was happening? How do I know like, hey, it's time to exit my puts? Well, this is where you start to use your skills and due diligence. For me, I thought that we were going to go all the way down to the get zero, which was 425. But I started looking at my time frames here, and I saw that across the time frames that there was no real strong support, right? All the way down to 425. The place where the strongest support is right before get zero, right? 426. 426 is on the 4-hour chart, and we were coming up around the last 2 hours or the last 3 hours of the day. There's no way in hell that in my opinion, that we were going to break this 4-hour support, and we got close enough to get zero. So that's why I kind of exited my trade. I didn't get the full profit that I wanted, but I definitely got some really good profits off of puts that day. So that's the other thing I want to say is like sometimes there's support and resistance between the GEX levels. So go through your time frames and look for them. The longer the support, where support and resistance is in the longer time frame, the stronger it is. So if you see support and resistance in the 5-minute time frame, those tend to break. But if it's in the 4-hour time frame, like we saw on Friday, those are a little bit hard to break. As you see, we bounced exactly right off of it. We didn't get zero, but we definitely had enough price action to make a really good trade that day. So, all right. So let's jump into the tool. All right. This is the tool, Trading Volatility, that I use for trading, and this is where I get my levels from. Where do I get my levels from on here? Right here. You go to trading levels right here. You do this one, and you say, I don't want to leave this page. So I'm just going to duplicate this page real quick. Okay. So you get your levels from right here. What you do is you go in here and you go to the trade you want to see, and you say, hey, I want my levels for trading view, and then boom, you get your levels, and they'll give you the process of how to insert these levels into your trading view or thinkorswim. If you want to find the instructions on how to do it, you want to do is in the new go to a new tab, and in the blog it has all the instructions on how to put these levels in your chart. Right here, you can go to export levels, and it'll tell you exactly how to do it and give you all the code and everything you need to do that. All right, a couple things I want to share with you. S&P 500. So this is what I'm following. You can see right now the rating is neutral. Why is the rating neutral? You can see that we have it's almost pretty much balanced here. You see 430 put calls and very strong 424 puts, and price action is bouncing in between it. As you see right here, 426 right here. This one stood out. This is where price level actually bounced off of on Friday. So these, when you're able to read the GEX level and see these moving prices like that, you can kind of get a good sense of what's going to happen for throughout the day, right? Your SPY prices here, your GEX flip. GEX flip kind of signals whether the market makers are buying or selling. If they're under this price level, they're selling. If they're above this price level, they're buying. Right now, we're under 440. We're gonna have a struggle getting up. We need to get above 440 to be in a buying area as of the close of Friday. These levels are change every day, and they also change intraday. So that's why that's why when you're doing your price level changes on this, is always to have a good range of price action. And price action typically happens within these 1 day moves right here. That's where most of your price action is going to happen throughout the day. You can also see the price action right here on these charts right here. So this one is actually at the close of Friday. So Monday, the 1 day move was looking like we can get as low as 419 and we can get as low as 436. That is a huge 1 day move for 1 day. But we might get stuck between these two support and resistance right here, 424 and 430 on Monday. That's what it's looking like as of now. Skew adjustments is it for negative or positive. And here's something you really want to pay attention to is your call skew. Is the call skew negative or is it too positive? The reason why this is important to look at is because you're looking at your call skew right here. This is your skew. This is your skew over time. And let me go ahead and go to the section where the call skew is at. If you go to skew charts here, and if you go to skew charts, this kind of gives you where your call skew is. Now, why is this important? It's a whole history of the call skew, all the way going back to almost a year. Why is this important? Because if the call skew is increasing, that means the stock market is getting more bullish on the trend. If it's decreasing, it's getting bearish. Now, the S&P 500 is typically bearish most of the time, so you're very rarely going to see a call skew above positive. If call skew does get positive, you can expect a reversal. How do you know that? Let me show you. Call skew right here on September 14th was positive. Was a positive number. It was 0.6, right? Let me show you on September 14th what happened on September 14th. SPY, September 14th, right here on this day was positive. And what happened? The next day, boom, reversal. Because that's an extreme number for the S&P 500. Every time the S&P 500 goes positive, that means extremely bullish, and you can expect a strong reversal. And that's exactly what you see happening here. September 14th, September 13th, here's the 14th, where everything kind of got negative, where we kind of had this little, where we didn't move much, and boom, we hit a bit, the market dropped. And as you see right here, right when the call skew got positive, it got negative all the way down again, and all the way down here, kind of bottoming out on September 25th, which September 25th was this day right here. Nope, September 25th is right here. Right here is where we started bottoming out. No, right here where we started bottoming out and it started to get positive, and you got to let it. It takes a couple of days for it to start to play out, and you see the market started found the bottom and start increasing. So this is historical. You can use this to kind of track your call skew, and this one right here you track your implied volatility. Another thing I want to share with you is you also get your 1 day moves, your upper lower bounds from here, and then you can also get your call skew from here. You see our call skew right now is negative 2.4, so we're still in really good range. The average, as you can see right here, the average call skew is negative 1.7, so we're below it. Once we start getting above this average, that means the SPY is extremely bullish and in bullish territory. So we can expect to see that in the upcoming months. Here you can also track your history of the put call ratio. This is something you can actually go back and take a look at and compare to the charts, and where you can see actually big moves happening, right? So that's what's really good about using this, because I know that a lot of us use technical analysis. Technical analysis is really good when it comes to finding chart patterns, but chart patterns tend to fail and have less failure rates. So use trading volatility as kind of like a way to look under the hood or behind the scenes of what's going on in the charts, and you can actually see what's going to actually happen, and then it actually gives you a good idea on how to make trades. And right here, let me show you something real quick. This also show you the volume. We're mostly calling put volume where it's happening on these certain strikes. You can see right here, 424. There's a lot of price movement coming, a lot of action coming here. Bulls or bears were really strong right here at 425. That's where they're pulling the market down. But you see this price right here, 426, is kind of where we reversed off of, and that's what's going the other way. We tend to reverse off these levels right here. 430 is where we kind of pushed off of. 432 was our high. If you notice, there was no more volume above 432. So of course, where's the price? Where's volume going to go? It's going to go to where all the price volume is, and the price volume is all below 432, and all the volume is all the way down to about 425. 425 is kind of where it kind of gave up, and we would have been full bear, but 426 is where we bounced off of. So this kind of goes in line with the levels. 432 was kind of our high. All the volume and all the gamma exposure was below this, and that's why the price actually moved down, right, guys? So this is another thing that you can use for it. Within Trading Volatility, if you go over here, it gives you a chart and it shows you the different gamma structures and how you can expect price action to perform given the gamma structure. This is something else that you can look over. We can talk about it more in depth. I don't want to go too in depth about it right here, but you can see like if we're in positive GEX, what's going to happen, and negative GEX, what's going to happen, and what's the most probability for to happen the price action. That's how I'm able to kind of get kind of a good idea of what's going to happen throughout the with their certain symbol. Something else I want to show you guys is right here. This is really good for open interest, but this is one thing that's really good about here is I want to show you the put call ratio. Right, if you see our put call ratio, we were skewed to puts on Friday just by like about 0.5% more puts than calls. And that's why we kind of moved downward. This one right here, Monday, we're almost 1-to-1. That's why we're kind of flat, because we're a 1-to-1 put call ratio, and that's just kind of pushing us to be in a flat position, and we may not get any movement come Monday as of the close of Friday, right? So those are some things I'm going to show you. Another thing I do want to show you is that you could also use this and use the same information for SPX and get the same stats. One thing I do want to show you is what does it look like when something is bullish. Here's an example. When you have all the price action, you see right now it's at $16. This right here is $16. There's not much more action below 15. All the gamma exposure is above 15. So a stock like DWAC, you can see it's going to push really hard, and it's going to and it looks like it's getting ready to break out. And you can just tell this just from the gamma exposure, right? And then you see like the GEX trend, and you can do a little more analysis and compare these levels. But I just want to show you DWAC on the chart. If you look at DWAC, look at the daily chart, you can see that yes, it's been bullish. It's been going up, and it's been finding support at 16. It has a very good chance of breaking out very, very soon, within the next couple of days, or maybe the next couple of weeks. But this one is somewhere the calls are very cheap right now, and you can get really good prices into trading this level on DWAC. Something else I want to show you within this is it has things where you can get trade ideas to trade for. You can use your GEX dashboard. Typically, where I look for my big pushers, or where you want your GEX to be negative, your call skew to be positive, and your IV above 125, and you want to get your price action above $5. And this is where you get your strong plays coming in. For instance, DWAC is here, Mara is here. These are going to be some really big volatile plays that are going to push hard. Piton is one that's going to push hard, really hard. It has strong IV. Mara, Riot. These are some other names that can push really hard, guys. So this is where I kind of get some of the plays that I get into during the week, and I just want to share that with y'all, guys. So this is kind of a quick overview of just how to use trading volatility. And if y'all have any questions about it, message me directly, and I can break it down for y'all. But the thing is, I don't really know what questions you have or what you're looking for, so it's kind of hard for me to kind of just cover everything, and I don't want to do it like a 2-hour video. So this is kind of a quick overview on how to look at things. Definitely send me, once you get your subscription, you get in there, please hit me up for any questions that you may have, and I'll give you a detailed explanation, especially on any plays and on any of the levels. You can even show me your chart and say, hey, based on this chart, what are you expecting to happen? And I'll definitely get deep into it with you guys and give you the whole full layout on what's going to happen, and kind of show you how to read the play that you're looking at. All right, guys, thank you for this time. This is the first of a many videos. I'll do some more throughout the week, but y'all have a great weekend, and I will catch y'all tomorrow.